This is BofC Live, the video and podcast series of Business of Cannabis. Find out all that we do at businessofcannabis.com. Coming up on BofC Live, a conversation with David Kerr. He's a senior vice president at Gallagher in Canada. He'll join us to talk about the impact of COVID on cannabis insurance, the best practices for cannabis companies to consider when thinking about cannabis insurance, and what their future may hold for those wishing to find insurance for their cannabis business, specifically around directors and officers insurance. This is David Kerr from Gallagher in Canada. David Kerr, thanks for being here.
Thanks for having me, Jay. Excited to be back and excited for the new year.
I'm excited for the new year too. Hopefully this is the year I come out of the basement. I don't know. We'll see. We'll see how it goes. I mean, you personally, you had a busy year. You had a child and a puppy, from what I recall from talking to you last year.
Yep.
Want to talk to you about cannabis and insurance and cannabis insurance, because it is something we actually talk about a fair amount here, thanks to you and the team from Gallagher in Canada. Looking back on 2021, did the year turn out as you expect when it at the intersection of cannabis and insurance?
I mean, to a certain extent, yes. I think a lot of us were more hopeful of some developments in other countries that were going to probably benefit a lot of operators in Canada. From an insurance perspective, it would have allowed for some more markets to enter and I think see a bit more disruption to the pricing and terms and conditions we're seeing out there. I think the M&A aspect that we kind of all first saw coming picked up. I think we saw a lot of retail M&A too. I think that is going to continue. I think from a financial perspective, I think given the situations we were all in, still being in this pandemic, I think it was mostly positive. I think it could have been a little bit on the worst side for companies. I think the cannabis industry as a whole was able to still operate and function well and be able to reach the consumer. Specifically, if you're a retail store, I think you were able to thrive a bit more than other businesses, right? And I think that was a tremendous positive to take out of the year.
And looking ahead to 2022, we're expecting sort of the M&A trend to continue, maybe even especially on the retail front, and certainly with the density of cannabis retail, specifically in Ontario. I mean, it's skyrocketed. I think it's gone up 120% in a year from December 2020 to December 2021. So we've seen a lot of that. I mean, I guess, how does that impact, how does that impact sort of how people are accessing and maybe even what they're paying for insurance right now?
Yeah, so I mean, if you have a one-off store, your buying power for your insurance program for a retail store to be with what the OCS has, it's very small. Like, there's not a ton of flexibility there. We've tried to be creative and provide stores with realistic benchmarks as opposed to how much stock you need to insure, what your revenue should be. Maybe it needs to be conservative. Like, you might be telling your shareholder base or fellow owners, like, hey, we're going to do this. We've seen enough for a while that we can provide some guidelines of where they're going to be, unless you have some data that's going to support tremendous growth. But it's hard for a lot of these guys when you have on 1 or 2 blocks, 5 stores. Like, I look outside my house, I'm 1 block off of Bayview, and there's literally 5 stores right there. And there's not a lot of differentiation going on outside of a few specific companies that are really pushing their brand, and they're almost like a retail store experience. And I think we're seeing those ones do quite well. I think we're going to see some M&A specifically in that space. I think there's going to be a lot more. We're seeing some stores who've had a successful year one and they're already up for sale, right? Because they're like, you know what, this was good. We weren't really in it for the long haul. We're hoping to get bought by some of the bigger guys, and I think some of those caps are coming off of who can, the 30 store cap in Ontario. So I think that's really going to be the picking up from a domestic M&A perspective. I think we're going to see a lot more of that, specifically in Ontario, maybe a bit out west, but Ontario, there's just been such an oversaturation. And the one thing on an insurance point is, if you're buying and collecting more stores, you have more buying power insurance wise. You can say, hey, I have 10 to 20 stores. I can get that property rate down. Maybe you look, instead of having a specific store, each specific store carrying your liability policy, you do a blanket policy, and that can produce some savings. So we were able to get pretty creative with how to structure those deals to make sure that you're getting the best coverage, and also, paying as least as possible to maximize. If you have, even if you have 5 stores, it still gives you a buying power with the insurer, and they're happy to do that because they're like, you're adding and you're growing your business with them too, right?
I wonder, as we've talked about this over a number of years, like paint a picture for what 2020 from your perspective might look like in terms of insurance rates. And there may be different chunks of that, but walk through what you're expecting, as it relates, well, any of these, but like D&O for sure, because that seems to be the thorniest or the one that causes the most headaches. I don't know. You tell me.
Yeah, I mean, D&O definitely does. Both public and private companies, they've been paying through the teeth for, the better part of 4 years. And it's due to there's limited market availability from insurance carriers. There's little capacity to be on the primary, which is your first policy in place. Whether you buy excess after that, it's up to you. And I just think those rates have just been going higher and higher, and no one's been really able to come in and disrupt that. We were starting to see at the end of last year, and we fully expected this year, some market disruption on the D&O side. I think we're going to start seeing some premiums coming down. We ourselves at Gallagher achieved, I think, one of the first ones of having similar or better coverage at a lower rate in December.
You throw a party when that happens?
As a broker, you're very excited because you're like, oh, I'm actually going to deliver good news for once. And so anytime you have that, it's a nice story. You're starting to see a bit more writing on the wall, and about some more people be like, I could only used to be able to do 5 billing. Now I can do 10, and I want to be aggressive and I want to participate in a primary aspect. And I think there's some carriers that are looking to disrupt the marketplace. They're doing a good job thus far. We want to make sure we're helping them. And I think you allow the ones who have been there for a while, who deserve their own shot as well. They're going to be like, oh, okay, well, maybe we'll balance this out a bit, right? Like the D&O pricing could really not gone much higher without people starting to just not purchase it, which was happening. And it's tough to attract board level talent if you're not having a D&O policy and you don't have any protection to offer them, right? So I think that's the biggest one for sure. It's going to be, that's what everyone is looking to see. There's, I think, some other, market competition when it comes to the liability and property coverages. Those are generally, they've been kind of coming down almost year over year, except for the vape exposure. That's still being rated pretty high. There's not a ton of, capacity out there. Hopefully that will change this year as well. I think more people are getting their heads around the space, understanding it. There's some historical data that you can now look at and say, oh, yeah, well, it's the cannabis space. And if that was the reason you wouldn't do it, that doesn't make sense because, people do insurance for all types of different industries. But I get if it was like, hey, it's an early entrance space. We don't know historically what the claims are going to like. And I think we're seeing them. And there's not a ton. And they're not severe outside of, the D&O side of things. But that's kind of what we're looking towards. It's what we're expecting this year. I think it's going to be a turning of the tide and some positive results and keep some good momentum going. And hopefully, if things change in other jurisdictions as well, that can produce more market entrance or more ease in which some insurance companies feel comfortable going into the space. I think that would be tremendous too. But it's getting hard to hold your breath on that side.
I think so too. And that's on the sort of on the market perspective and what can be expected in the coming year. I want to zoom in or let me paint a picture and you tell me how it would roll. I want to open a cannabis retail store in Ontario. I have a location, I have a game plan, I have a business plan, all those things. I call you and we walk through what? Like you walk me through sort of historically what retailers need. Like tell me exactly sort of how people work with you so we can share with our audience like why they should call you and what you'll tell them when they do.
Yeah, I mean, we try and make it as seamless as possible. There's an application that needs to be done. It's kind of been refined. We have almost like a quick checklist of things. It's like, these are the questions we really need you to answer. So you can disregard these pages because it's kind of a catch-all. So it applies to retailers or applies to transportation, security, production, cultivation, all of that. So you have to peel out of that, and we want to make that as simple as possible. And then we're going to provide you with, here's similar stores and similar regions are going to be probably buying this type of coverage, that are buying these limits, and this is what they're getting from the OCS and what they want to see. From a revenue standpoint, my mentality is always go conservative, right? Because if you go over the top, you're just going to get charged more premium. They're not going to give you money back.
Right.
Now, if you're conservative and then you hit a higher target, yeah, they could maybe adjust it. But as long as you come back to them and say, hey, we still want to renew with them, usually they don't worry about that. So the main thing is like we just want to walk through, we'll see the business plan. If you have one, it's great. Your investor deck, those are tremendous to have. Maybe a layout of the store, and then give you this kind of quick hitter of like, here's the, bare information we need to make this process more seamless for you, and then who you can compare yourselves to, without obviously giving anyone's name, but just saying, store A, B, and C bought these coverages in that area, and this is what you should be banking on, right? Unless you know that you're putting in, an extra couple $100,000 into the store, or you're going to be having, a ton more stock than expected. So that's kind of how the process works. And then we generally are turning them around pretty quickly, like within a week.
Yeah, I think that's the helpful part too, because as you know, everybody's always in a rush, and sometimes they don't have the foreseeability, but working with someone who understands the process, been through it before, I think is super helpful, which is why we like working with you, because you've seen it all as much as anybody has seen. You understand the landscape, and you're willing and able and I think, working with the cannabis industry. So we're happy to point people in your direction, because we ask you lots of questions and you always have the answer. So I want to thank you.
Always happy to help.
What's that?
I'm always happy to help. That's just give me a call and we'll talk it through. And especially if, hopefully soon in the future, being in front of people again. I think we got teased for that for a bit, and now we're back to this. So hopefully it'll be done soon.
Well, I'd like to see you for the first time in 2 years. That'd be great.
Yeah. I think we need to at least do one of these like outdoor sets of this, or do something.
Not this week.
Not right now. Maybe in a month.
Maybe in a month. We'll do a February spot. David,
I appreciate you. Toss snow pants on and whatever. So.
Well, I told you that I had to turn the dryer off because we've been skating already today. So we are turn the dryer off, do the interview, turn the dryer back on, so we can head back out and build a snow fort. David, I appreciate you taking time. Thank you so much. Thank you for the partnership with Gallagher in Canada. We look forward to connecting with you down the road.
Awesome. Thank you so much. And we're so happy to be a partner of your guys moving forward.
Can't wait. That was BofC Live. If you like this program, please subscribe to our YouTube channel. You can also find us wherever you find your podcasts. We're able to do what we do because of ongoing partnerships with Alterna Savings, Cannabis at Work, Cannabis Benchmarks, Can Delta, Gallagher, Headset, and Torque and Main. Find out all that we do at businessofcannabis.com.